so, okay. All right, so anyway, we already did no petitions. All right, number 3, discuss possibly approve minutes of the October 16th, 2023 special meeting. Wait,
Okay.
hang on before we do that. I know that there were some of us that were out on one of these meetings. That's before we dig into that.
Chris,
Yes.
I apologize. Wait, never mind. It's working. Sorry, sound, she said it wasn't on, it's on now. I apologize. Never mind.
I think you and Randy were both missing on that.
Correct.
On October 16th.
Yep.
Since we wouldn't be able to vote to do that because we wouldn't have it, do we want to have a motion just to table it next time?
Okay, make a motion to table
I'll second.
Okay, any discussion? All in favor?
it. Okay.
Go ahead, he's got to call for the vote.
Yeah.
Well, I'll try to
Do
do
it
it.
number 3 to the next meeting.
Yes,
Yeah, there's not a quorum here to vote on it.
that was actually here for the meeting.
You ready?
Yes, sir.
Yonke,
Yes.
Shropshire,
Yes.
Chipwood.
Yes. Yes.
Number 4, discuss possibly approve minutes of the November 29th, 2023 special meeting. And I do believe all of us were present for that meeting, so I'll entertain that motion.
I'll make a motion.
Second motion.
Any discussion? Call for vote.
Shropshire,
Yes.
Chipwood,
Yes.
Yonke.
Yep. Number 5, presentation from Jennifer Written with Brown and Brown regarding an insurance update with possible discussion to follow. And let's see, which one of these is,
The bound one right there in your hand would be the best one. That's the
Okay.
color
Just
version.
gave you a color copy.
okay,
It's
thank
the
you.
same thing I sent to you earlier today, it's just in color. Maybe easier to
If you
follow.
sent something to me today, I can promise you I did not see it.
Okay, well, that's fine. You know, it's kind of late. We're early this year. April 30th is really early, so that's good news. Plenty of time to discuss all of this and make decisions before open enrollment. Hopefully we'll start around the 1st of June. So I'll just give you a little bit of a status of the plan, some notes just to kind of set up where we've been and where we're going, where we are. So the loss ratio, which is the amount of money that's been paid in premiums for the year so far, compared to that same expenditure on the other side in claims, this isn't in your handout, by the way, this is just notes, sorry, is at 100.5%. So basically, the $1 million that had been spent towards premium, Blue Cross has spent 100% of that back right out the other door in claims. So they started the renewal offer at 11% increase, and we've negotiated that down, which we'll talk about. The pharmacy spend is up 19%, so that's the biggest cost driver this year. There aren't really high cost claimants as far as cancers and, you know, premature babies or anything like that that we typically would see. Mostly pharmacy. Prescriptions are the driving force for the cost. There are 3 of those. One of them has cost the city in 9 months $200,000 in claims. One
Wow.
prescription, yeah. And this is not that out of line for employers. We're seeing it everywhere.
Is that
Yeah.
problematic? Because I know we're having some issues with pharmaceuticals right now nationwide. Is that part of the reason for the inflated costs?
Yep, it's an ongoing conversation at the national level too. And a lot of it is these really expensive drugs that give people their life back, cure diseases, you know, give them a healthy way to live again, and they're just really, really expensive. So it is something that's being tackled legislatively at the national level and here at the state level too. But right now, there's not a whole lot of relief for you guys. Just to give you some perspective, as far as the members go, employee or spouse or child on the plan, when you look at all the claims that have been spent this year, the employees share of that cost on average is 17% of the overall claims. So the plan is paying the other 83%. So you have a really good benefit that you're offering to your employees. So I'd just like to also share that perspective for employees too, so they realize this is better than average benefits.
For clarification, so I understand what you're saying, you said we're right at the 100% what we've paid out. Is that prior to or after the 17% that the employees are picking up?
That does not include the employees' share at all.
So that's actually, okay.
Yeah, that's actually what the plan paid out. And then on top of that, employees paid another 17% for their claims out of their own pocket. Good question. Relative to the cost of those medications, the members out of pocket on average for medication, not medical, just prescriptions, is 2.6%. So again, it's a really rich benefit that you're offering people. In 2023, so last year's renewal, we had 111% loss ratio, so it's better than last year. The increase we negotiated with Blue Cross, we got it down to 8.3% from 11, so it's kind of the same story, you know, same song, second verse. National trend is 7 to 8%, so inflation, you know, just the inflationary cost of healthcare on overall on health plans, and the prescription is 9 to 11. So your pharmacy's up 19%. The national average is 9 to 11. So on a size of group, even though it's a large population, it's not huge. So one or two of those high cost medications can really swing, you know, things one way or the other.
Is our prescription cost in our region comparable to others?
For the city here, no, I would say that you're creeping up on the high side. That one drug is
No, I mean,
pushing up.
sometimes pharmaceuticals are more expensive in certain locations
Oh,
than others. Are we
gotcha.
about par for the course, or is it, we just
The
have more
actual
claims?
cost of the medication, a lot of that with your plan actually has to do with the negotiations that Blue Cross does with the
Okay,
pharmacy
all right,
benefit
gotcha.
managers, the PBMs.
Okay.
Yeah, so that would be more statewide, but it also varies from pharmacy to pharmacy and from drug to drug. It's very complicated. Until you get to where you could be self-funded, you're kind of locked into whatever your carrier has already negotiated for you. There's not a lot of transparency there. And they do get to keep some rebates and things. I'm sorry?
We really don't have enough employees.
We've
to
looked
do
at it
that.
the last couple of years. Theoretically, you do, but with claims this high, it's risky. No one has come to the table yet with the quote, wanting to take it on. We'd like to see employers 100 or more, you know, definitely looking at being self-funded. It does happen smaller. There's things we call level funded where in car metaphor, like the chassis is self-funded, but the wrapper on the outside looks like what you're paying now. So you pay a set amount every month like you're doing now, but underneath in the workings of the motor and everything, it's really set up like a self-funded plan. So it's kind of in the middle.
That's if you break even.
Yeah. Yeah, you at least know what your max is, and there's a potential maybe you might get some money back at the end of the year.
Is there a way, and since y'all are discussing self-funded is risky if you have large claims?
It's risky if you don't understand how it works and you haven't set it up appropriately so that you know what your worst case scenarios are.
Mhm.
So that would be our job, to make sure that it's set up with all of the safety nets and all of the things, and that everyone making the decision understands what that financial risk is, and that that money is banked and sitting there should you need to tap into it. And then over the course of 3, 4, 5 years, what you hope is that you start banking some of those savings.
Yes.
And then when that big bad year happens, you've got money in the bank that, you know, you can keep. So you're basically taking away the insurance company's profit and keeping it for yourself.
If you ever dig into that a little deeper, I'd love to sit down with you and look at it.
Absolutely, yeah. That's where the fun begins. That's where we can really.
I used to
take
actually
control.
sell group policies and stuff like that, so I understand a little bit of it. So
Yeah.
I would love to see if it's something that could help down the road. Thank you.
Yeah, and that's
Sorry.
really where.
I know we've
our-
asked a lot of questions,
No,
but
no,
it's
no, it's
helping us
good.
understand.
I'd rather you ask questions and understand, because you're going to be asked, why did you make these decisions? What other things did you look at? What could you have done differently? So we have that conversation now, you know, you're prepared for that. But When we get into those more strategic conversations like being self-funded, that's where we shine as consultants, because that's our expertise coming to the table. When we're fully insured like this, you're really just pitting carrier against carrier. We're leveraging, saying, hey, we're Big Brown and Brown, we got a lot of business with you, Blue Cross, we need a favor, lower this down, which is basically what I did. Need this can come down. And I told them, I explained to them the city budget stuff this year, like a lot of businesses, and they need a break. So we got it down a little bit, I think to a palatable increase at least, below trend, so that was good. As far as other solutions, no one's being qualified for Inter-Oklahoma this year, which is a double-edged sword of good news, because that means that the city is able to pay employees more, and maybe the spouses and the family members who are working with the employees here are making more as well, so employees haven't qualified in the last year. But the income guidelines did just go up this April. So for example, a single person making less than $34,000 a year would qualify for subsidy rebates back from the state that would go back to the city. A family of 3, so like if I were a single mom and had 2 children under the age of 19, I could make up to $58,632 a year and qualify for that program. So that program pays back the employer, the city, 60% of that premium for that employee, sometimes more.
And how many did we have?
We have 0 now.
That's what I thought.
Yeah.
You didn't
There
have
were
that.
quite a few years ago, and like I said, just, the Inter-Oklahoma guidelines haven't risen as quickly every year as the underlying salaries have around here, which is all the competition after COVID. But we're keeping an eye on it, and during open enrollment, we'll still keep it out there. It's still in place. So if someone does qualify, it would help them, add their spouse to the plan maybe. But,
And that would be something that you and HR would pick up and
Yeah.
automatically implement.
Yep, we
And
administer all that.
Nobody would really need to know, because it's not really our business.
Exactly.
Who the individual is, but yeah.
Yep, but it's out there, and there's also some claim refund money that employees can get to, so we'll keep educating them on that, and then help them through that application process if that's something they decide to do. Okay, so now if you'd like to dive into this packet here, any other questions about just kind of where we are, how things work? Before we start.
Do you kind of have a rough idea, the increase over last year, what we're gonna be putting in an annual?
Yep, you're right here, we're ready to go.
Because I know Zach is gonna need that.
Zach already knows.
Oh, okay.
So,
Been down this road.
just past the table of contents, there should be page 1. It's a marketing summary. We went to all of the fully insured medical carriers here in the state of Oklahoma, and then we also shopped out what we call ancillary, non-medical, criminal, vision, life, disability plans. And so you can just kind of see their responses there. Most of them were not competitive and didn't even offer a quote because they knew they couldn't compete with what's already in the renewal. They would have actually been higher. We are showing a quote from Community Care, which ended up being basically in line right with your renewal, but the benefits aren't as rich for your employees. I just wanted to show you like what the next worst case scenario would be. So if you look at page 2, that's where we really get into the details of what the renewal looks like. So under the green section, those are the 3 current plans that are offered. You have 3 different choices of plan, 2 different networks, different deductibles. Employees can move in and out of those every open enrollment. So all in annual costs, those numbers in the green, that is not a true net budget item for the city. That is the total billed premium. So some of that money is being paid through employee payroll deductions. So once we kind of get past this phase, we can drill down into what's the actual net budget impact to the city.
Excuse me.
Under the yellow 2 columns there, those are the renewal options. So dropping the preferred plan, that's an old network. We really don't even need it around here anymore. And that plan is more expensive just because of a broader network that's really a moot point these days. There's only 10 employees on it. But what the employees I think oftentimes don't realize is they actually have higher claims expense on that plan. So they're paying for a bigger network that really they don't need. And they've got higher risk on their claims. So focusing on those 2 yellow columns, These rates, we've already negotiated this down, but Blue Cross won't release the rates until we're ready to pull the trigger and say it's sold. So I can calculate for you what my guesstimation, and we'll just like caveat it, right, that it may not be to the penny. Right now, they're offering 3% off of that 9, so it'd be essentially a 6% increase over what you have now. So just under a trend, 6% over what's budgeted currently. So that's what that red note is at the top. Blue Cross has agreed to reduce the medical renewal by 3% of those rates below. And then also Blue Cross sells dental and life and disability. So we'll look at what it would take if you move those benefits over to Blue Cross Blue Shield. There's an additional 2% on the table that they would discount these medical rates. So we're looking at this 9, all in all, could be reduced to 4 total. Is that making sense?
So it'd be like when you have
If you did
multiple
everything.
vehicles on one policy, you get a
Yeah.
multi-car discount.
Basically,
We'd be getting a multi-line discount,
yeah,
yes,
bundled package.
bundle, yeah.
Yeah, because they're getting revenue off of those other, you know.
And how
dental plans.
comparable are they to what we currently have?
They're pretty comparable, so let's just jump ahead and look at that, and then we can come back here if we need
Okay,
to.
what page?
Page 3, we can kind of just glaze over, but I wanted to show you that we did get a quote from Community Care. Again, I don't think it's comparable because of the benefits. Page 4 is a network comparison. That second section there talks about the dental network. So what we did is we pulled the dentist in this area, Locust Grove, Pryor, like a 30-mile radius, and compared the current Delta dental plan to Blue Cross's dental network, and they all lined up with no problems. So that's kind of checking that first box to make sure we're not losing a lot of dentists by moving the dental to Blue Cross. Page 5.
One question.
Yes, sir.
You have Lori Smith, that
Uh-huh.
doesn't have that third one, principal, but
Yeah.
that's the one that we're not considering?
We're not considering
Okay.
principal. Yep. Focusing on Blue Cross or keeping Delta. And I have gone back to Delta and told them that we have competition from Blue Cross to see if they can give you some rate relief. So before next meeting, there may be some relief from Delta. Right now, Delta's asking for a 16% increase, but we have the Blue Cross plan here. So these Blue Cross premiums are more expensive on their dental plan. For the single employee, it's about $2, and I'm just using rough round, right? For the employee plus spouse, it's about 4, children 5, and full family, it would be about $18 more a month to move to Blue Cross Blue Shield Dental. But when you take a percentage point off of $1 million bill on the health plan, you can see we're shifting money from one pocket to another in some places. The city is paying for a lot of this dental already, so this affects the city as much as it would any employees that are having to pay for family members. Does that make sense?
Yeah, so we're robbing Peter to pay Paul.
Yes.
And it
So that's
looks
just
like-
what you need to keep in mind, even though, and you'll see I've got a summary page in the back where it's like total all-in cost savings. You can see what the savings would be on that big number on the health plan related to a little bit more expense on some of these ancillary plans, and you still come out with savings in the end.
So the offset slightly to our
There's still
advantage.
savings. Yep.
Okay.
Yep.
It looks like the only big difference is the orthodontic benefit going from 2,500 to 2,000.
Yep, really there's, that's the main one that I feel like would be, you could say a loss to employees, $500 less on orthodontia, so that's braces, it's not real common, but it is there. To offset that, Blue Cross does allow adults on the plan, so employees and spouses to get orthodontia, so there's an improved benefit. The other differences, I don't know if you, that's why I kind of wanted you to have the color copy there, it's kind of an orangey color. If you look towards the top, the annual benefit maximum with Blue Cross is $3,000 versus $2,500 now. So they've thrown in an extra $500 there. The other difference is there's a line there that says, does the preventative benefit reduce the annual maximum? So right now, not to get too in the weeds, if I go in for my cleaning on your Delta Dental plan, that, let's say $100 charge for my cleaning and x-ray doesn't come out of my $2,500 benefit bucket for the year. With Blue Cross, it would. So that's why, again, you've got a $3,000 annual max. Surely for $500 a year, we can get our teeth cleaned twice and get our x-rays. Okay, so it's kind of a balance there. This dental plan is not something that Blue Cross is able to go in and tweak these things to make them align exactly. They've got shelf rate plans. You just have to pull off which one matches most closely. So 6% more overall on the premium, but you'd be saving 1% off that $1 million medical plan, okay? So that's the dental. On the vision side, it is less expensive to move to Blue Cross. I don't recommend it, to be honest. Just, if I were you, if it were my decision, I don't think the savings is worth it. The network is smaller, the benefits aren't as good, and just from my personal experience, moving customers from VSP over to iMed's network and, you know, the administration and just seeing those day-to-day claims come through, if I were an employee, I'd rather pay the extra $2 a month to have the better. And this is employee money here. So, that's if you want my personal recommendation, which is what I think you guys pay me to give you, I would not move the Blue Cross Dental, the Blue Cross Vision plan. I would just leave that with VSP for the benefit of your employees.
Will our HR concur with that? Because you're the one that deals with that on a regular basis.
Some things aren't worth a couple dollars of savings. You know, if your employees are spending $100 or $200 more for their glasses and contacts, saving $2 didn't help. And if they have to leave their eye doctor they've worked with for 10, 15 years and go to Claremore, they're not going to be happy with that either. So, next page on 7, the basic life. So this is the life insurance, the $15,000 that the city pays for all full-time employees. Again, if you look at the rates compared to your Mutual of Omaha plan, that's in a 2-year guarantee, it is more expensive. It would go from $21.93 a year up to $29.95 a year. So it's $800 more a year for the city. However, you get a 0.5% off your medical rates by bundling those together. So we'll see at the end what that kind of works out to in the numbers. But the benefits themselves line up. The same age reduction, all the same bells and whistles.
So they get a $15,000 plan.
As long as they're under the age of 65. At 65, it reduces.
And then they have the AD&D.
Which is also 15,000.
Okay.
And this, like I said, Mutual of Omaha, currently the life and disability is all in a 2-year rate guarantee. So that rate was put in place in July 2023 and won't expire until July 2025. We normally don't shop mid-rate guarantee, but we just, again, looking for everything we could for the city to reduce that medical plan as much as possible. If you want to flip over to 8, we just got a couple more to go and then we'll look at a summary. Page 8 is the voluntary. So this is the life insurance employees can elect to pay additional for out of their paycheck. The rates and the benefits line up now between Mutual of Omaha and Blue Cross Blue Shield. It would bundle with the basic life, so the employer life and voluntary life and disability, we always keep those 4 things together. There's some contractual reasons for that, waiver premium type things like that. We want to keep those 4 together. One nice little carrot that Blue Cross has thrown in here for everybody is one time for open enrollment this July, all employees could buy up to what we call guarantee issue, which is $100,000 without having to answer any medical questions. Right now, the contract reads you only have that option when you're a brand new hire, that first time you're eligible. And then every open enrollment, if you want to increase or buy it for the first time, you've got to go through health questionnaires and you can be declined. This would give every employee that opportunity to buy up to $100,000 with no questions asked. Just kind of again, just a nice little carrot they've hung out there for you.
That's not little. That's a big deal.
It could be to some people that can't get life insurance now, yeah?
Both policies have it too.
Well, on the mutual, it's only for new hires. On the Blue Cross Blue Shield, it would be for everybody. So it is definitely.
Each open enrollment it would be, right?
just this one open enrollment, just July 2024. I know, it's really difficult to get all that in these little bitty boxes. So it's a one-time open enrollment, July 2024.
Well, that'd be something they'd really want to know about.
Mm-hmm.
And so,
However, how would that work for new hires after that?
After that, new hires would still have that $100,000 guarantee, just like they do now. Yep. You've had
So-
employees that have been here for what, 10, 15 years that maybe would like to buy some life insurance and they can't.
this benefit, is it the employees only, or is it also for their
If the
dependents?
employee has it, the spouse, they can insure their spouse as well, and the spouse's guarantee is $50,000. Children can be insured for up to $10,000. All children under the age of 26 have the $10,000 benefit, and you only pay for one child, so it's a lump sum for all children. And the rates are the same.
So they're similar to like a rider on individual policies that
To
children
add those
add,
kids
yeah.
on. Yeah.
Similar, okay. That's good. That's a good benefit.
Okay, let's talk about two more. The short-term disability with Blue Cross Blue Shield, same benefit. It pays 60% of weekly payroll up to $1,200 maximum. Benefits begin after the person's been off work for 15 days. Continues to pay for 24 weeks if that's how long they're disabled. Has a 6-month pre-existing condition exclusion for anybody new on the plan. Employees pay for this, so it wouldn't be a budget item to the city for this premium. It's the same between Mutual Omaha and Blue Cross Blue Shield. However, again, we've got that little discount out there for packaging. 0.25% would come off your medical rates for adding the short-term disability. So that one seems kind of like a no-brainer, right? Let's look at the long-term disability. It's another option employees
Quick
can buy.
question.
Yeah.
This is this is employee pay,
It is,
that's the annual amount?
yes.
So, and so that would be,
There aren't a lot of employees that have it, quite a few, but, definitely not the whole 85 employees.
okay, thank you.
Okay, so the long-term disability, we're kind of back to that decision of, are we just moving money around? So with Blue Cross Blue Shield, their long-term disability rate is higher, 32% higher overall than the Mutual Omaha rate that's currently enforced. This is all employee money. I ran the numbers employee by employee, and I have a list, and I sent the list to Lisa of every employee, how this would impact their costs out of their paycheck each month. The average number is $6.15 more. I, as an employee, would pay for my long-term disability if you move all these benefits to Blue Cross, okay? The savings on the medical plan is much more significant, so it's a tough decision.
Yeah, when you're talking a percentage point on medical
Yeah.
versus a $6 increase here, you're really,
Yeah.
you get a benefit there.
And I think that's, again, that's my role when we do open enrollment meetings, is to communicate that, yeah, we're all chipping in a little bit more over here on this benefit. However, if you had passed on that 6% increase on the medical to employees, that would have been a huge number. So, I think most people are reasonable. None of us want more money taken out of our paycheck. They can drop it if they want to. I hope that doesn't happen over that. It depends on their age, what their rate is. As you can see there, it gets more expensive as you get older. And it also depends on, honestly, their benefit, how much money they make now, what their actual rate is. But we've got that broken down so we can see person by person. But employers all over the country are making this decision. This is not unique to you guys. It's a give and take, and it's just finding the best balance, the wisest choice we can given the circumstances we're given. So let's look at the overall view here, and then we can go back and talk details if you want to. On page 11, what I've done in these boxes is you can see there's a current box. We've got Blue Cross Medical, Delta Dental, we've got Vision with VSP, we've got the 3 Mutual Omaha plans. All in all, again, the bill, not what the city is necessarily paying, but the actual bill right now is just over $1.2 million. The renewal without today's decrease of 3% by Blue Cross, no discount. So if you kept everything as is right now and didn't make a change, you'd be looking at a 10% increase overall for a $1.3 million spend. So $114,000, $115,000 increase. Okay. Moving over where it says option 1, you can follow me with this. I've replaced just the dental with Blue Cross, kept the vision with VSP, kept Mutual of Omaha Life and Disability. That will save you $12,000 on the medical premium alone for the year. For a total 9% increase. Again, shave off another 3, that takes us down to 6. Following along so far? No, I'm throwing a lot of percentages at you. Far right column would be the least expensive option. Moving the dental, the employer life, the voluntary life employees pay, and all the disability over to Blue Cross Blue Shield. That would save you $24,000 off the increase, or 2% off the medical plan. That gets your increase down, again, overall bill, not necessarily city budget money, $97,687 or 8%. Shave another 3 off of that Blue Cross has already promised. Now we're down to 5 overall.
Wait, it'd be down to what?
5. Because they've already told us they'll give us 3 off the medical.
So it's gonna bring it much closer to where it is now.
Again, I mean, it's tough decisions, right? Do we all pay in a little bit more to keep our family on the dental plan? Do I, as an employee, pay a little bit more to keep my long-term disability policy so that my
How
health
many have
insurance
that?
can stay where it is? Sorry?
How many have long-term disability?
Ooh, I do, should have come prepared with that question. I'm thinking it's about 20%. Actually, no, I've got a report. I can count them. I can count. Let me do.
If you don't have it, you can just email it to us.
Well, Lisa probably knows, don't you?
She's got the list.
Oh, okay.
How she does.
What's your
I
thoughts?
show 36 in a quick count. That's almost half, actually.
What's your thoughts on this, Lisa, being an employee?
I'm thinking we need to do what we absolutely can to get the medical premiums down, because that affects everybody on the medical. I mean, it
Yeah.
affects more people. The medical's gonna affect more people than the people taking out long-term, short-term disability.
Okay. So you think that the option 2 would be probably the
I think it's
route
very,
to road?
I think it's very reasonable. I don't think it's a big ask, a huge ask.
Okay.
I think it would be doable, especially to keep that premium down, because it's already gonna go up. It's just how
Not as
much.
much,
Let's try
right.
to,
But to have an employee, benefits and everything, probably what, $40,000 to $50,000 a year for the average employee for the city?
the city, if somebody's on a family plan, maxed out on everything.
No, I'm talking about what their benefits, what it costs us to pay them.
Right, medical, dental, life insurance alone, we pay up to $18,000 a year per employee. We max out at that. And then the employee picks up the rest of the cost.
And so if they're getting 35, 40,000, so basically knocking this down, we could potentially save the value of 2 employees' salary package. That's what I'm looking at, you know,
Also, you could save the employee quite a bit of money too.
yeah.
Well, and you know, if I can, when we discussed this today, we did look at all the options, and it wasn't necessarily all about saving the city money.
Right.
Because if you look at, I believe it's the dental, it goes up, but the conversation we had was that, you know, dental is a quality of life kind of thing. You got bad teeth, you're gonna kind of hate it. And in fact, we're all kind of sitting there comparing our own problems, but if you've got the ability to go in and get those cleanings and that 100, whatever that dentist charges, if it's one fairly local, there's one that's very expensive for the cleaning and x-rays. That comes off of your deductible. So if I've not got, you know, the resources to get the major dental done, the caps, the root canals and things, but I know that my deductible is diminishing by doing those others, it may incentivize going to get some of that heavier chisel down my deductible by doing what I should be doing,
Mhm.
we might be allowing them the opportunity to feel like there's more freedom in getting the quality of life dental work done.
Mhm.
And so that would be worth encumbering a little bit more. But again, ultimately, you know, we want to make sure that we're not just going all out, costing the city as well.
Mhm.
And so I think really the best combination is leaving, you know, when we talked, was to leave the vision where it's at. It works good.
Mhm.
We actually have, you know,
And they have a
everybody's
better
gonna
product.
complain when they have to go to glasses, no matter what their insurance is. I gotta pay this. But the truth is, we actually have very, very well-recognized vision plan. Everybody that I've talked to.
My eye doctor, it's their favorite, yeah.
Yeah, they're okay with it. It's good. It covers, you know, what it needs to cover. The dental, you know, we looked at that, we just talked about that. I think really what we're looking at is, that option 2 was even earlier today our best combination of options.
Given all the facts and circumstances, and just running down this, I mean, I'm looking through some people's LTD won't even go up $1 a month. Hope I'm not gonna miss that. The most expensive one, probably someone older, maybe a higher salary, $22.52 a month, so that's the high side, but most of them are more in that $5-6 range. There's a few, maybe $8, $10 to $12 a month more. So, I'm a big fan of disability. You know, you don't think you need it until you do, and then you wish you had it, but pretty much everybody touches their health insurance every year. So, it's totally up to you guys though, and whatever I can give you reports, number-wise, we can de-identify this report for the LTD, and you can just see how it affects real people. You know, again, we can drill down and get to a net impact here, because again, we're talking bill, like total bill, total cost. I can work with Lisa and we can drill this down into more of a net employer versus employee cost share. She can see how the scales tip one way or the other.
I think the value is there, so long as the employees understand. So we have to figure out how we can communicate it in a way that they can understand.
It's my job.
Mhm.
Yeah, it
See,
starts here.
They have employee meetings that you give all this information out anyway.
Yeah, yeah.
And
And we
so-
talk through why decisions were made the way they were, and that perspective of what's going on in the real world outside of the city's health plan, like what it's really like out there with other employers. Randy, did you have a question?
No, I was just figuring on that, at 1% off. It's gonna be about $120 per employee that comes off on medical insurance for a $3-4 increase over here. I mean, yeah, you're more, but you're keeping the major one here, even though you're paying a little more here, but you're reducing.
Yeah.
Even though it went up, we're getting closer to where we're at. No,
Yeah.
yeah.
To me, the math makes sense, and that way you can, if you made that decision, you could say it was justified because a little bit here, but a lot here.
Mhm.
Yeah.
I just did the figures in my head based on about 100 employees and rounded, so, yeah, yes.
But I don't think you have to make a decision tonight. You certainly don't for me. I don't think it's even on the agenda. This is discussion, right?
No, we
Randy?
actually can't make a decision.
Yeah.
It's a discussion
Yeah.
only.
Thoughts or questions? And you can always follow up.
I figured out pretty well. It looks like we have it all down here.
It appears to be reasonable on first glance, as far as I can see. I don't have any flags jumping out at me.
Mhm. You guys have all the numbers, so, I mean, that's the way it is.
Yeah.
And if you can get it down to 5%, that's gonna save quite a bit of money.
Right?
And they're still gonna have the same benefits.
Of course.
3% doesn't sound like much, but when you're talking about over $1 million, it's a lot of
It's a
money.
lot of money.
So you're saying that we have to, the decision to make this, it's gotta go to council, and I guess we're gonna have to meet one more time so when do you have to have this decision made so we can back up to the council meeting, then
Yeah.
back up so that we know when we have to meet again?
I,
Because we only meet once a quarter regularly,
Yeah,
and that's probably gonna push us too far.
That's too late.
yeah.
No, you'll have to have another meeting, probably, if we could have a decision from you guys by the end of May, 1st of June, then we could
What's the last council meeting of May? Cause it's not, did we skip a week? Cause the last one was April 16th, right?
We did, we got,
Yeah, that's,
we got a buy this week.
Okay, I thought, I was like, are we off a week? So if so 2 weeks from Tuesday,
Be the 21st, would it?
if we could get it to council then, that would be nice because we could start open enrollment quickly and then get everything that Lisa needs for payroll well before July 1 payroll runs, if that's doable.
Okay. We will have one caveat. He's coming off,
Okay,
which means either we will have the alternate initially, or if we put somebody, we'll have to bring them up to speed
Okay.
on this as well. So as soon as we figure that out, you'll get a new name that this has to come to, whether it be Charles or somebody else. We'll figure that out.
Okay.
I'm just letting you know, so that when you get this name pop up,
Yeah.
you'll understand that that's what's going on,
okay, yep,
Um,
absolutely.
so that they can make an intelligent decision, and I'll work with them.
you've put a lot of work into this.
Yeah,
Lots
thank
of
you.
hours in there.
It is, but it's satisfying when we get to this point where it's like, okay, I think we might have a possible solution here,
I
right?
didn't think you could get below 11 this year.
We keep grinding,
That's,
just keep
that's
grinding.
pretty amazing.
One thing, like I said, we'll talk about Intro Oklahoma again. We also last year did a Medicare education meeting for anyone who wanted to come to that. And quite a few people realized Medicare was going to be a good thing for them, and they worked with an outside third party, not me, not the city. It was not incentivized, or it was just education. And they decided to choose the Medicare route over the health plan. So we have a few more folks this year who are either 65 now or turning 65 before next renewal. So that's something we can offer too, is just Medicare education, comparing, these are what the costs, these are the benefits, do with it what you want. But, again, fewer older people in your plan honestly does help with your rates long term. So you just can't incent them. All we can do is educate. It's totally their choice. It's against the law to do anything different. I'll make that clear. One last thing, if we're kind of ready to close that conversation. Not just trying to spend the city's money, but employee assistance plans, EAPs is the short phrase for that we use, are very popular. We have one now through Mutual of Omaha. You would have one through Blue Cross Blue Shield. Those are canned in with group life or disability benefits. They're nice, but what we found is over the last couple of years, especially since COVID, more people are using mental behavioral health benefits, and so now there's a shortage of those providers. Those kind of free ones that get tacked on aren't very robust, and so we've had employers come to us and ask us for something better. We have a national population health team. We have a national director who is a mental behavioral health physician, and a clinical director who's a physician as well. Anyway, they have vetted out companies across the country and narrowed it down to a few that they feel like have the best programs, and then they have Brown & Brown negotiated pricing. So what we did is we narrowed it down to one called E&I for the city, if you were interested. The cost is $1.27 per employee per month, so relatively very small. What they get for that, a lot of things, but I'll try to keep it short. So the most important one probably is 24/7 access to mental behavioral health by phone or video chat. There's an app, you can do it through your tablet. You can speak to someone at home on your time. What we know here in rural Oklahoma is we don't have access. I've had my own employees can't use our EAP at Brown & Brown, the one we had before we got better, because there's nobody here to go see in Mays County. Sometimes not even in Rogers County. And if there is somebody, it takes months to get into them. Well, by that point, it could be too late, right? So this would give people virtual access to therapy, basically, for all the things. It includes everyone in the household, so you buy it for all the employees, and everyone in their household can use it as much as they need to. They get 8 sessions per issue, so maybe like stress is an issue, grieving is an issue, financial stress might be another issue, legal, all of those different things. They would get 8 visits for that, and then the telephone counseling, that's unlimited. There's also a health concierge, so if I get a bill for like a surgery and I don't understand it, of course they call us anyway at Brown & Brown, but they could call this as well, and they help them go through that bill. Let's say they need cancer therapy, and they can't afford to drive to Oklahoma City. Help me find something closer and different. Maybe it's better to go to Joplin. This company would help them do that. So it's a concierge service. They have some special things also for police and fire, so it'd just be another resource you could give to police and fire. If there is an incident, let's say somebody passes away on the job, there's a bad accident, there's a shooting, active shooter, something like that, they'll have someone here in 24 hours to meet with all your employees and help them with crisis. E-learning, all kinds of things on the app if you want to like do meditation and different things. It's pretty cool. Anyway, I'll stop talking about it,
So,
but,
no, don't stop. I got a
That's
question.
good stuff.
okay.
Well, society's gotten more and more stressful. With this, it sounds like predominantly online,
Mhm.
but I'm assuming that if it's a serious situation, they have ways of linking to.
Yes, they'll refer you to somebody, even if it's Tulsa, they'll get you to somebody. But what we see is that triage, need somebody now, need somebody tomorrow, or I need 5 sessions and I can't afford to take off work half a day and drive Tulsa 5 times in a week. You can do it virtually on your lunch hour or after you go home. So. it's
And
just
I
a-
imagine if somebody's really having a problem and this system speaks to somebody, hey, they need somebody now.
Yeah.
It helps them get treatment or help or whatever you want to call it, much quicker.
Yes, and you can even, when you're shopping for your therapist, when you're going to make an appointment, if you want a male or a female specifically, if you want someone who deals with abuse and trauma or PTSD, whatever it may be, they're also trained in specifics, so you can identify who you want, for those specific things.
Well, that's a good feature because there are
really cool.
some issues that are gender sensitive, I guess would be the
Yeah.
most appropriate way
If
to
you're a
say it.
woman who's been abused by a man, you might not want to talk to a man
Yeah.
about, or vice versa. It's not always that way.
That's good.
We have negotiated performance guarantees with these providers too, so they have to answer the phone within a certain number of minutes. We get reporting that's of course de-identified, but we'll know how many people have called in and used it. We see these plans that we have been in place for the past few years get double the utilization of just that, kind of tacked on kind of free one, because there's more positive outreach for one thing, but then also when you need somebody's actually there to take the call. So anyway, $1.27 a month if
I
it's
was gonna
something
say
that
That's pretty reasonable.
And is that city pays or employee?
the city would pay that, and it'd be for all full-time employees. Or you could do it, if you got some part-time employees, you could include them too if you wanted
And
to.
that's for the family.
Yes, that's the whole household. Yep.
Well, the thing with it, not only does it benefit the individuals and their families, it also benefits the city because
Yes.
when you got happy, healthy employees, they're more productive, so it's better for everybody.
Absolutely.
Top to
And
the
there's a
bottom.
lot tied in with health and productivity and mental health. I know the firefighters aren't currently on the benefits we're talking about today, but they're city employees. You could offer this to them as well. And there's I'll just be honest, there's no compensation for us in these. This is just, we think it's a good thing. We offer it, it's negotiated.
So the
to us.
firefighters, it could also be offered to the law enforcement as well.
Yeah,
'Cause
yeah.
they're the ones that could really benefit from something like
Works
that.
out, depending on the plan, to be about 2,000 a month-ish, so, or a year. sorry.
Year, yes,
Year.
year.
Wow, yes, 2,000 a year for the,
They'll
But
even,
that's a big benefit
Really
for the
reasonable.
people.
it's a wise investment for the city.
they'll train your managers and supervisors, so maybe the mayor, maybe like, street department manager, Jeremy at police, how to identify when an employee might be having a struggle. They come in late, they're missing stuff at work, they're just not themselves, they seem down or whatever. And then how to approach them with the conversation of, hey, we have this resource, So I think it's really cool.
Yeah, that's really good.
All right. Well, they have my contact information. I don't know what the appropriate avenue of communication is. I don't mind if anybody emails or calls me with anything, but if you want to send them through Lisa and then I can answer and she can disseminate it to all 3 of you, it might be best. But yeah, any questions between now and the next meeting, I'm happy to answer them.
Okay,
Okay.
appreciate it.
Thank you. Thanks for your time and your good questions. Sometimes it is, we do all this work and it's nice to have people that are engaged in the
I
conversation.
do have a comment for the mayor. If we ask her a question and she responds to all 3 of us, is that a violation? Yes.
Oh, okay.
Yeah, so that's why I would say direct your questions
Yeah.
And it's not that we don't appreciate
Yeah,
it.
that's what I'm like, I don't know
We
what
don't
the
wanna violate the
protocol
Open
is.
Meetings Act.
Also,
Sure.
there's not a bombardment on her, you know, we're not her only client, so that would allow Lisa to gather them all up and make one call and address them at one time. I would prefer that.
Yep. That works for
So
me.
you're not on the phone every 20 minutes or so.
It's okay. It's
And we
fine.
may all three ask the same question, there's no sense in answering it 3 times.
Yeah. Okay. All right. Well, thanks. I appreciate your time. We'll
Thank
see you, I
you.
guess, probably by the end of the month.
Lots of work.
Okay. Okay, thank you.
Okay. Any other discussion on item number 5? Item, yeah, that's what we were just now talking about. Item number 6, presentation from Chris Kennedy with Brown & Brown regarding a workers' compensation update with possible discussion to follow.
So I have a couple documents in front of you all. They'll be redacted for privacy things. This is a little bit different than what Jennifer just went over. It's just an update. The workers' comp doesn't renew until August, so this has given us 3 months to prepare for it. But this will be an update on conversations that Lisa and Courtney and I have quarterly, like we talked about before. What I'm going to do is talk about the new modifier rating the city has, and that's really the key component to how the workers' comp is rated. Our new modifier rating that's going to go into effect is a 1.33, so it's going to be this white and yellow sheet if it's multicolored. That's the new rating for August 1st of 2024. Last year we were at a 0.96, so as far as basis points goes, it's 37 basis points higher. You can think of that tying into premiums and dollars here, that it's 1% premium for every point on that mod. So we're based off that modifier, we're going to have to prepare for a significant increase this year. The thing that's a little bit different, well, there's a lot of things different between workers' comp and employee benefits, but there's always a lag year. So in 2024, we're dealing with the claims from 2022 and 2023. In 2025, we're going to be dealing with the claims for this current year, 23 to 24. So there's always a lag year here. What made the modifier increase is just we had an unusually high year historically on claims from 2022 to 2023. We had, what happens is on the modifier, there's always a 3-year window, so it's 3-year claims history. So every year, 1 year falls off and a year replaces it. So it's a rotating 3-year cycle. So this year, we lost the claims from 2019-2020. That was $42,000 in claims. It got replaced by those claims from 22-23. We had $235,000 in claims. So it's an uptick. The silver lining to this is that in 2025, it should drop right back down. It should drop 28, 29 basis points in 2025. For this current year, for 23-24, we have $85,000 in claims, but big asterisk here, 80,000 of it is in reserves. It's imaginary money that's sitting over there that may or may not be paid. So the 2025 modifier might be somewhere around a 1.05. It could be significantly lower, depending on what these open claims work through. So there's this loss run report right here. The names are redacted on your side. I don't look at the names. I'm just going to focus on that claim number, the last 4. That's just, if I say, hey, claim 001.
Is that this?
Yes, that's that one. So for this year that I talked about, pages 1 through 5 are for this current year, 23-24. So that's where at the very top right column you can see the total cost. For this current year, we've had 11 claims totaling $85,572. But again, 80,000 of it is in reserves. So
Explain to me what you mean by reserve.
Yeah, so explain or show you?
Either way, it's just so
Okay,
I
so like
understand.
more right here at that top border column.
Where's that?
So this will be on the top of page 5, okay? So the gross medical paid, so that's what the carriers actually paid in medical bills so far. The indemnity is what they've paid in lost time, time off work for now, as far. And then open medical reserves or potential medical bills that may be lingering out there. And then the indemnity reserves are lost time. If somebody has a surgery, they're gonna get an impairment rating, they'll get a lump sum at the end of their surgery. That's where that could be. If you all may have a shorter version that looks like this, that will show the 5 open claims that we have
We do.
currently. Okay, 1, 2, 3, 6, excuse me. So a lot of those, again,
This page.
yes, it's gonna be that one. So the top 3, again, I'm not gonna mention names, but the top 3, those do not affect our mod rating. Those are gone, they're still out there, but they're not affecting us. So really, we're looking from 0542 down. Those are the only ones that are open right now. So that is on the low end. We were also able to get 2 of our claims closed that show open on the modifier. So that's gonna help us in 2025. But focusing on 2024, okay, we, back in November or December, we had talked to Lisa and Courtney and said, look, there's a lot of changes that are coming to the formula on how they publish this mod in Oklahoma. We thought the mod rating was gonna be somewhere around like a 1.45. We thought it was gonna be significantly more. It came in at a 133. So as far as a premium standpoint goes, okay, because that's the important part here. We're probably going to be in the range of about 269, 270,000 for our premium. Last year, well, this current year, our premium was 188,000, give or take. So it looks to be about an $80,000 increase. Now, that doesn't factor in if our payrolls change or if the rates change. The rates on average are going down in Oklahoma, 8, 9, 10%. So this is just looking at just the modifier. Obviously, we're gonna work down off that number, but that may be a high-end number that we're looking at. I think in December, we'd even said to maybe budget for 280 and work down. So that 269, again, unless we have significant payroll increases, we should be about there. I think last year's payroll is about 5.7 million. So if we're close to that this year, then we should be okay. That number will change if we're going from 5.6 to 9 or 10, right? But if we're relatively close, that 269 should be kind of where we need to look at. It's kind of going back to where we've been historically. 2 years ago, our premium was 240,000. 3 years ago, it was 256, and then the 2020 year, it was 350, 370,000. But again, it's a 1-year bump. In 2025, that should come down substantially. For this past year, we did have 20 claims. 5 of them will have an impairment rating on them, so somebody maybe lost a small end of a finger, something like that. But we've done a really good job on the medical only side. Of those 20 claims from last year, 13 of them were medical only. We really harped on that the last couple of years. This year, we've had 11 claims, 9 of them are medical only. So we're really doing good. We just had 1 bad year. And that's gonna happen. Every 4 or 5 years, you're just gonna have an off year. And we talked about this last year. We knew it was gonna go up in advance, but we didn't know where. So as far as the premium goes, I would probably have that number budgeted at 269, but we're obviously gonna work with CompSource to get that lowered. We do monthly reporting, right? So every month, they fill out a payroll report and just, here's the payroll we had from January 1st to February 1st. They send it to CompSource and then you just pay the premium for that month. So it's almost like a rolling interim audit every month. So what'll happen is, since this is an August 1st renewal, they'll take, in the first week of June, they'll take those 10 months of monthly reports and then they'll average the last 2 out. And they'll say, okay, based on your monthly reports, this is what we think your payrolls will be. Then they'll base that premium off of it. So we should have a more finite idea of what the premium is last week of May, first week of June. Probably don't want, I mean, it's up to you all with what Jennifer's got to deal with. We may want to just deal with that first and then do the workers' comp instead of trying to do them both in the same meeting. But the end of May, beginning of June, we should have an initial number. And then we work off of that. So CompSource is aware of the situation. They know it's a freak year. So we're gonna negotiate those rates down. So that's really what we're looking at. I mean, it's not great news, but we've been having this conversation for several months now. We've kind of been expecting it. We shot a little bit higher than that before, but just something to keep in mind. And again, it's a minor thing for the year, but we at least have a game plan instead of, you know, me holding this information back. Because this was issued on February 26th, and I had an email over to Lisa and Courtney on the 29th. So they've been aware for the last couple months. So again, it's up, but it's claims related.
So this is, the 270 is an approximate worst-case scenario.
Yeah, if nothing changed on the payrolls or rates from last year, the only thing that changed was the modifier, you're looking at 270, yeah. So what may happen is, you know, the payrolls may stay the same, but the rates are coming down statewide 7 to 8% on the whole. So dog catcher may be up, but police may be down, right? So not everybody is down, but on average, they're trying to go down. We've seen 7 to 10%. So if nothing else changed, it would probably be in that 270 range. But if the rates come down, it could be lower. If we go from 5.7 million in payroll to 7, we can factor that in too. I mean, I can put a very basic Excel sheet to go, here's how much is purely payroll. Had nothing changed, this is what we would look like. But that's an approximation. So the fact that we know that number, we can budget for it, and then ideally get CompSource to try to come in at, can you do 240, something like that. And then we'll be able to tell you all in June, here's the initial number, here's what we're trying to push for. CompSource may ask for some information. Hey, what do we need to do? What are we doing moving forward? But I don't suspect much pushback. I mean, we've done great. I mean, the claims that we do have that are large, we really can't do anything about them just because of the type of employees that we have, what divisions and departments. There's freak things that certain employees deal with that you just, no amount of loss control or training is going to stop some of those situations.
In your estimation,
Yeah.
without really getting into details,
Yeah, sure.
the nature of the claims that
Mhm.
shot it up,
Mhm.
you said 2022?
Yeah,
Is that just something that they'd look at it and say, hey, that's a freakish thing, or is it something that they may?
yeah, they can. So those claims from 22, 23 in the loss report, those go from page, hang on, I'll tell you, page 5 into page, there's a lot of them, so it's going to go a couple pages long. Page 5 to page 14. The top of page 15 is the summary. But what they'll do, like if you're looking on page 5, for example, it doesn't have anything paid out, but let's look at 0647, okay? The injury description, now nothing paid out on this was information only, but you can probably guess what department and division that came from, right? Just from the nature of the claim. The CompSource is aware that most of our claims come from certain divisions, and that's just anybody, right? Construction, more of your claims are going to come from your concrete and your roofing guys than they will your sales guys, right? So they look at that and go, okay, is this a frequency issue or is it a severity issue? So do we have a lot of little claims or do we have just a handful of big ones that we can't do anything about? It's kind of counterintuitive, but with workers' comp, you would rather have severity than frequency. So what helps us is, one, we do have 11 claims this year, but 9 of them are medical only. And those get reduced by 70% when they publish the mod. So that's good, right? Last year we had 20 claims, 13 of them are medical only. That's fine. We just have a few large ones, and it's the nature of some of our beasts here. The other thing they'll do is they'll look at our historical mods. So last year it was a 0.96, the year prior it was a 1.01. So we can tell them, look where they've come in 5 years, and then we can estimate out what 2025 is. Again, it's just a freak issue. So the fact that, yeah, we do have some large claims, but they're coming from a specific area that we really can't do anything about because it's, again, the nature of the employees, that helps us in our negotiation to get the pricing down.
Probably got a library.
Yes, the paper cuts in the library are our big bugaboo. Yeah, now, and it's kind of joking, but that would be worse alternative, that when they look at the divisions and you have a bunch of claims, well, 2 of them are from every single department, what are we doing here? The fact that these 2 or 3 divisions are turning in all, like, what do you expect? It's kind of, kind of part of it. So, yeah, we're doing a good job. Kudos to the people at the library. They're doing a really good job. But it definitely helps us out. And again, you guys have been a long-time customer of CompSource. They understand it. Most municipalities are probably in this position, especially the ones that have the higher risk divisions, police, fire, ambulance. Again, it's just the nature of the beast, right? You could have somebody throwing a hose over their shoulder and there it goes, right? There's no amount of safety training you can do to stop a torn labrum. It's just a freak accident, right? But you guys are doing a really, really good job. Whole picture. We're kind of on the premium. This next year, we're kind of deviating back to where we had been previously. But again, it should just be a 1-year thing. We'll just have to grit our teeth, get through it. Let us negotiate with CompSource just like Jennifer did with Blue Cross. Work that down. And then, again, work through that. Try to get below that number. And then Heidi and I will keep doing our monthly claims reviews, getting all these claims closed out, and try to get that mod back down closer to a 1. I think if a few cards fall right, we could get right back under a 1 next year. I mean, it's that substantial of a swing that we could potentially be looking at.
For clarification, I know the utility board went their separate ways on some things.
Yeah.
Did they go their separate way on this?
So on the policies, yes. Now, I don't know how the breakout would work with the modifier.
That's my question,
Yeah.
if some of their employees were the ones that upped our rates.
I think.
Has that been looked at?
I
That's my
think
question.
we looked at that in December, and I think we had 1 claim that was a MUB employee in the past, but most of our claims have been us.
Okay, so-
Mainly from our 2 big divisions that you would expect those claims from. As far as their rating goes, they should have theirs out in February. So you may want to ask them if they've got this, because I don't know if it has been split off to where they have their own rating yet or not.
So they would not have negatively affected us?
No, not
That
necessarily.
was my question. That's
Yeah,
all.
no, unfortunately, our librarians are ours. Yeah, so no, we looked into it, 1 or 2, maybe did it, but not enough to really swing it. I mean, our increases are
So when that toner got on their face and they couldn't
That was the
work
one.
for 3 weeks, they, because they were embarrassed.
the ink toner in the eye, yeah, that'll get you. So,
I'm being
Right.
facetious.
Our library is extremely safe.
Oh, yeah.
Yeah,
not disparaging them.
that
either.
was tongue in cheek.
Yeah, they do.
We
They
were
do.
being facetious for those that are watching. We're just trying to add a little humor.
Yeah,
So
no offense.
don't
Gary, no.
think there's problems.
But again, like I said, in closing, I'll leave it up to questions. You all are doing great. All the departments and divisions are doing well. It's just when the things happen, that's what workers' comp is for. We've gotten away from all little paper cuts and slips and falls and things that we can take care of on ourselves. But workers' comp is in for the big stuff, the surgeries, broken ribs, what have you. We've gotten to that. We just, had a little rash of bad luck, is what it is. And, we just had to use a little bit more, but we're getting everybody taken care of. But I can tell you, CompSource is thrilled with you all. They get it. I mean, they've been around the block enough to know that we can tell the whole story, right? Because they don't want to come in, and you got to think from their perspective too. They're going to work with us because the last thing they want to do is have to break you over the coals 1 year. You're mad at them, and then if you find another option, you leave. They're not in the business of burning bridges. I mean, our underwriter lives in Claremore. Like, she's very aware of what's going on here. So, you guys are doing great. The departments are doing well. We just got a little 1 year hiccup, and then we'll be right back on the road. We'll be doing just fine. So, I know I went over a lot. Are there any questions that anybody has? Again, this is just kind of informational only. We've got several months to figure out what we're doing, but just wanted to bring you up to speed on what we'll be working on in the next, it's already May.
Well, my
3
questions,
weeks, yeah.
my questions are answered, and I know you'll get with us after we clear up the other
Yes, sir.
that's more pressing time-wise.
Correct. Yep.
So, we'll handle the
Yeah, what we'll
the
try
more
to do,
time-sensitive stuff first.
we'll try to get this done the first board meeting in June. If it doesn't work, that's okay. I mean, we'll work around it. The mayor and Lisa and Courtney will know what we know. So we'll inform you, and then when the board is ready to make that decision in June or July, that's fine. So yeah,
What
we'll
real
take care.
decision is there?
Well, this has both been very straightforward. I don't foresee,
Yeah.
personally,
Yeah.
I wouldn't have a problem if it was both in the same meeting.
Mhm.
And I know either of these two gentlemen probably would feel the same way. However.
Yeah. I mean, I could
can't
ask-
Speak for the new person that's gonna be.
I could push CompSource to do it. Once we know what board meeting we need to vote on the benefits for, then I could push them to say, hey, we're doing the benefits on this night. Is there any chance we could get it early just to knock it out?
Could I make a suggestion,
Mhm.
Chairman?
Sir,
Let's keep them separate. We have new faces coming on, and I'd hate for them to get
overwhelmed?
the mindset that it's the same thing going on.
Okay, I'm okay with that.
That way we have, like, Jennifer's is Jennifer's, Chris's is Chris's. That way they're not the same night, and overwhelmed is probably a good word, but confused.
I'm good with that. In view of the I mean, if it was the three of us, I wouldn't care, because we already know, we've heard it, but like you said, there will be somebody new, and I can go along with that.
Well, we've got the two new counselors, we've got Ms. Bradshaw, we've got,
Mhm.
I think Bruce was here for it last year,
But when we do our O and I meeting,
yeah.
I would be okay with doing them both at the O and I meeting if they were ready, if you're okay with that.
Sure. Okay.
And then when it comes to the council, you would be controlling the agenda as which ones would come up and when on that.
Yeah.
So, like I said, I'm fine with it.
Yeah, I'm flexible too, whatever's easier. We're in no rush
And
on it.
you would be okay with it in the same O
Sure.
and I meeting,
Uh-huh.
yeah.
Okay.
Okay.
We can do that. All right. Well, that's.
Any other questions? Thank both of you for your
Very welcome.
time.
Thank you so much.
And thank you for our HR and office people as well, because I know that you are an integral part of this,
Everybody's working hard.
so. All right, so moving on to number 7, unforeseeable business. I am aware of none. Do you know of any, Mr. Mayor? Okay. Number 8, I'll entertain a motion to adjourn.
Make the motion.
Second.
There's a motion and a second. Call for the vote. And while the clerk is handling that, I do want to remind you that if you have any problems with the audio for this meeting, we think we fixed the problem, but if not, please let us know so that we can take
Call
care of it.
Courtney.
Yes, call Courtney.
Oh, thank you, that'd be great.
Did I just pass the buck? Is that what that was?
I
Yes.
think that was, yeah.
We think we have it fixed, but we're here in the meeting, and I don't go back and listen to it, so.
Yes, I think we're good. All right, Sherwood,
Yes.
Gauthier,
Yes.
Shropshire.
Yes.